Hi everybody, I'm Oriana Shea with the Oriana Shea Group, a local realtor in Long Beach, California. And today I am here with one of our trusted lender partners, Josh Atwood from PNC Bank. And we're going to talk about two really important topics in the market right now. One is interest rates and the volatility, because they did make a pretty significant jump down about a week ago. And the other thing that we're going to talk about are some new opportunities for those of you that are thinking about buying and entering the market, especially if you have a home to sell. You're going to really want to stay tuned for this. So, hi Josh.
Hi, thanks for having me.
You're welcome. You're welcome. Thanks for being here. So let's start with the rates. We know that they took a pretty good jump down last week, which was a big,
yeah, it was
positive.
It was.
So,
we've been looking for some positive news in the mortgage interest rate world as this year has sort of unfolded. And so, what we saw last week was interest rates come down, and we're seeing that translated to about $200 a month for most of our buyers. So your monthly savings right out of the gate, all things being equal loan amount wise, you're down about $200. And then as this week unfolded, we saw them jump right back up, and then we got those gains back again today. So all things net, you're probably $250 lower than you were 2 weeks ago.
So gains meaning they drop back down today.
Exactly.
Okay, just to clarify. And before we go any further, I'm going to apologize, but I have a new puppy and she was howling in the back, so meet Piper. She's our newest real estate dog. Sorry.
No, that's all right. That's all right. I think that leads us into what about the rest of the year, right?
Yeah, so what do you guys, you guys are, of all the lenders that we work with, you guys are pretty spot on with, okay, we don't have a crystal ball, but this is what we're anticipating, this is what we're seeing, we think is coming. And you guys are pretty accurate. So, if you had to bust out the crystal ball, what are you seeing or what are you anticipating?
Yeah, I think that's a great question. And looking ahead, what we're hoping happened over the last couple of weeks is we hit the ceiling. So that's really what we've been trying to figure out. And when I say we, that's a collective within the industry. So not like us and our bank, but just overall, how much can the consumer absorb? How much more can the real estate market absorb in terms of higher interest rates? And so we're hoping that the levels that we saw in the last couple of weeks and the rates coming down from there, we're hoping that they stay below that amount that we were at a couple weeks ago, because that means we're past the highs. So we've kind of turned that around. Now, we do expect it to continue to be volatile. We do expect the economic data that's coming out to be mixed, and the Fed continuing to find the right balance of all of that stuff. And as that kind of unfolds, we are looking ahead to, early spring, to where we're really going to make that corner with interest rates. So that's what we're projecting. A big thing to watch out for, of course, is going to be inflation. And we're hoping that the efforts that the Fed has put into place this year by raising that rate will have the desired impact on inflation, and then we can turn that corner and start to see rates just kind of settle down.
And traditionally, this is pretty normal to see this kind of up and down trajectory when we're approaching the ceiling as it stands, or?
Yes, I think looking back, I think that the most interesting thing about what's happening right now is how fast it's happening. We've seen rates, you can look back at historic interest rates and you can see the chart of where it was in the 80s to where it is today.
Right.
And I think the most interesting thing about what's happening right now is how fast it's happening. So certainly we've seen rates where they have a ceiling, they come down, they kind of bounce around in a certain area, they change sometimes multiple times a day. So there's definitely volatility that exists in there, but it's rare for us to wake up one day and interest rates are 0.5% higher or 0.5% lower than the day before.
That's what happened last week, which was huge. And the other thing I think is important to mention is that the majority, or a lot of the buyers in the market today are millennials and younger. Like, they don't have a basis of comparison. All they have ever known are well, aren't interest rates normally supposed to be at 3%?
Well, and I'm sure if you go back in the Oriana archives, you'll see us saying rates are at historic lows and they won't be like this forever.
I know, but they thought we were full of crap.
But
and they didn't believe us.
when you say that for 3 years running, we can't blame them too much, can we?
You're right. But what I'm saying is there's a lot of buyers in the market that don't remember or have any historical basis for what the interest rates have done in the past. So to move on, because I want to keep this going here, sorry. Let's talk about the video that you guys sent out on HELOCs, because this was a huge aha for me when I saw this, because I saw it as an opportunity for people that have homes that they potentially want to sell, but are reluctant to do that until they know where they're going. And this could be a huge opportunity for those of you out there in that position.
Yeah, absolutely. We're super excited about this as well. So a home equity line of credit, or a HELOC, traditionally is a second mortgage on your property. And so what we're doing now is we actually have the opportunity to help you get a home equity line of credit on the property that you already own, and have you be in a position to use that equity line for a down payment on your next purchase. So this eliminates the need to go contingent, because you're going to free up the equity in that property, which, by the way, how's equity looking right now?
It's huge. I mean, people have a lot of equity in their homes right now. So to be able to free it up or have it on hand, that is the ultimate of leveraging your equity in your property to work for you, right? So look, could you make a contingent offer on something with it being contingent on you selling your current home? Yes, you can, and we do it all the time. But I will tell you that with inventory still being really low, in a lot of cases, we're still seeing multiple offers. So if you're competing, you are not going to be in a favorable position if you're making a contingent offer on the property that you want to buy. Having this in your back pocket and on hand as a plan B, if you will, if a contingent offer doesn't sound feasible, this is huge, you guys. And you can still close both properties back to back. We can still try to negotiate a concurrent closing so that you can even use the rest of your equity towards your purchase. And I can talk to you more about that offline if this is something that you'd like to get more information about.
Well, I think what this does is gives you two things. It gives you flexibility and it gives you security.
Yeah.
It gives you flexibility to be able to enter the market to purchase how you want to enter the market. So you can put your best foot forward and get into it with that flexibility.
Yeah.
The other thing that it does is offers you security. And what I mean by that is a place to live. If I go list my house today and it goes on the market and it sells, and I haven't found my replacement property, and I now have 30 days to move out of my house, where am I gonna go? That's when I'm frantically calling Oriana going, where are we at? What are we doing, right? And so that security of being able to take my equity and move that into my new purchase, sell this one, pay it all off, be done with that, and have my new house, that flexibility plus security is what we're offering our clients today.
Options. We're now able to offer more options, right? So I'm always looking for all of the creative ways that we can go about making this transition for you guys seamless and less stressful. You know, knowledge is power. So this gives you guys one more option to sell your home and, you know, be able to comfortably transition into your new home. So again, I hope this was helpful. If you have questions about the interest rates, HELOCs, we can put you in touch with Josh, reach out. If you have questions about possibly selling your home and making the transition and what your options might be, and if this might be a viable option for you, we would love to talk to you. Thanks for watching. I'm Oriana Shea. This is Josh Atwood. Bye for now.